Well, guys, it's another sea of red in markets around the world. But with Fed Chair Powell coming under fire from Trump about rate cuts, what should we be really looking at? Well, as it turns out, it's earnings season for the biggest tech this week, and Tesla kicks it off on Tuesday. Will this stock finally go past its 220 base, or is this going to be a buy the dip style opportunity? In today's video, we talk about the massive options flows coming into those stocks, the huge moves in gold and why this should potentially scare you, and whether it's now going fully euphoric. Also, what about the links between gold and Bitcoin? Could it be that when gold goes first, Bitcoin comes second? Alt season, crypto, a lot of things heating up when we cover today stocks, commodities, and cryptos to bring you up to date with everything you need to know right now about markets. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss. What's going on with gold? What's going on with crypto, stocks, and of course, earnings season kickoff. What does the options market tell us about the next big moves? Let's kick things off here though with value of call put volumes. As you guys know, whenever we get euphoria in a metal, you need to start paying attention to it. And it's happening right now in gold. One of the best runs we've ever seen on the metal is currently underway. And this has me a little bit worried. And you guys know that I love gold. We've been talking about it for 2.5 years, and we've been incredibly bullish. Two key levels, 3,000 and 3,600 have been our targets. And it looks like we might get both of them sooner rather than later. Now, why could we be concerned? Well, the rate of change is starting to extremely go above any point in time that we've usually seen. Now, as you guys know, when rate of change goes this high, we usually start to look for tops in markets. And while that doesn't mean that it's going to stop just yet, you have to be on the lookout for what we call a blow-off top. Now, these are very common in euphoric metals, euphoric stocks, and everything else. And as you can see with the latest data from Subu Trade, it looks like we've got some problems here when it comes to gold and the distance from the current 200 DMA. And when you look at these types of reads, I'm not going to actually focus too much on the next 1, 2, 3 days, which yes, tend to be quite bad. Only 14% of the time, 2 days later after these reads, were we actually bullish on gold. But I want to focus on the ones that go later on. Have a look here at what happens 6 months later, what happens 9 months later, and even 1 year later. The stats are really bad, specifically around 9 months later. In all of the most recent times, other than stagflation, so it's important to note that if you believe we are in stagflation, which is another topic, then you could like gold. But other than that, this tends to be that point where you start to get into the a little bit too high kind of markers. And that's because it's been going now for around 3 weeks, where we've seen incredible gains day on day on day, week on week on week for gold, and it's going past its standard deviations. Now, to make matters worse, we've also seen gold get some of its biggest transactions. Now, usually I don't pay too much attention to these unless they're huge, but as you guys can see, the biggest transaction ever on FPHYS, which is the Sprott Physical Gold Trust, came through only last week. And while the stock has gone up, of course, more since then, it does make you wonder, was that someone taking profit or was that someone entering? Now, I have had a look at your comment section, and a lot of you guys believe that I'm being a moron for even thinking that gold is going too high. But you've got to remember that we were gold bullish back in the 1800 price range. And realistically, we've been gold bullish the entire time. It's not that I don't think gold can go up to higher levels. I just think that usually when you go into these periods, everyone piles in, someone's left holding the bag, and often the market will go into a period of, I guess you would say slow growth to no growth during that point. You also need to remember that gold tends to be a liquidity kind of hunter. So if liquidity dries up at any point this year, gold will suffer from that. Now, why is gold moving? Well, of course, it's central bank purchasing. It's all of the reasons that we've talked about several times, including many, many different central banks trying to start their own major currencies. And it's also partially an attack on the dollar. On top of this, we've also seen realistically rates fall around the world, which is also making gold a little bit more attractive across the board. But on top of all of this, flows into money markets have, of course, been going in very high directions. And this is because everyone is concerned about the geopolitical situation. And what tends to be one of the best hedges against that? Well, it's gold. But is there another hedge? Is there a newer hedge? Well, the question about this seems to be pretty interesting. And I guess altcoin screener here has a cool chart to do with that rate of change on gold versus the SPY. And what he found was that when you actually look at since 2011 at these periods where gold goes absolutely ballistic and starts to top off, that Bitcoin often then starts to play a little bit of a catch-up game, having some of its better gains around these points. I also noticed when I was looking at this data that it tends to be around March and April periods that we tend to see this, which I think is very surprising because, of course, what month are we in right now? April. And many people consider the altcoin season starts as April themselves. So there's a lot of, I guess you could say, hype and enthusiasm going back into the crypto world, specifically in Bitcoin. I think the key here is Bitcoin. When we were doing the analysis to try to find out what was going on with Bitcoin and more importantly, gold in terms of the, is there any kind of synergy between them? We found that Bitcoin was really the only one that had that type of synergy. And it was different. Of course, it's still an early, let's say, alternative hedge or whatever you want to call it. But at the same time, it did have some of the properties. So Bitcoin is in a very specific period here. And you can see over the last 24 hours, it went ballistic. It actually almost broke to a new high and changed trend towards the upside, which we'll go through in a moment. So let's now take a look at NVIDIA versus Cisco. Now, this is a chart we've shared quite a few times, and you might think, wow, what the hell is this? But realistically, the main thing here is to understand that markets are facing one of their most important times that we've seen in many years. Why is this? Well, we're trading around $96 for NVIDIA. And as you guys know, that is a 61.8 fib golden pocket when it comes to where we're at right now on this market. Now, if we end up failing here and NVIDIA continues to make new lows, then we've lost what we would call the lead of the market. And for many people, we already have lost that. But of course, we also have some signs of oversell. Recently, The Economist had 3 major articles talking about the end of the US dollar, which, by the way, I'm not a believer on just yet. So don't think the US dollar is going bust or anything like that tomorrow. But you've got to remember here that everybody is super bearish on markets. And this brings up many different reads, including here the NASDAQ summation index from Seth Golden here, which is basically showing you here the McClellan summation is in the buy territory for both the NASDAQ and the S&P. Now, traditionally, when you've bought these levels, they've been close to lows. And as we've shown recently, if you buy things such as percentage of stocks below the 200-day moving average, and that actually goes really, really, really low, then that can be a point of stabilization in markets. And even with the sell of the last 24 hours, we still have stabilized in this very large range. Now, why is it important to, really look at all the facts and the figures? Well, it does take bulls to have a bull market. And at the moment, doesn't matter what sentiment report we're looking at, every single one is coming in bearish. Now, we will need to climb the wall of worry if we are to get out of this. And of course, if this market is to improve, which currently it's in, of course, negative gamma and overall, you would say a downward trend, then we need to actually see the bulls come back. This has not happened yet. And of course, we'll be looking for it later on this year. Now, where have we found ourselves? Well, if you're looking at the standard kind of runs, the 1960s run, the 1980s to 1990s run, we are at the point where you tend to have a pretty brutal pullback, but you end up coming back through with a nice gain and making a new high. And we don't know that's going to happen yet, and it's going to take a lot of deals to be done. So, of course, we're looking for Trump to be doing deals over the next 90 days and to be reducing these tariffs. But in general, this is such a pivotal, important point for what has been one of the biggest bull cycles that we've ever seen. Now, recently we saw here this Goldman Sachs interview, and it showed here that never positive with tariffs. And I just thought I'd read this to you again. Tariffs increase inflation initially. Tariffs result in the end with deflation because tariffs are taxes, and because tariffs are taxes on demand, and that crunches. Demand crunches precedes deflation, and deflation occurs with recession always. So I thought this was a very interesting one here, and it's never happened to the contrary, even in other periods such as the delayed 2018, which you could argue was part of a weakening market even before the 2020 COVID crisis. So when you're looking at tariffs, you've got to think about it as that is actually a pretty good general rule of thumb with how tariffs work. Generally, they follow a certain trend, and we have seen this when you look at and you are a student of history, and we'll talk more about that in the future. In terms of S&P 500, 10 days on now, it has done exactly what we expected it to do, up, down, and all around. After that big 9% upward session, we've basically just stayed going up, down, quite a lot. And this is the state of a volatile market. So not bad for day traders, shocking for, of course, investors and positioners while you're looking for those really good positions in price. Let's have a look here at what's going on with the big dark pool liquidity. First up, we've got here the S&P 500 bear 3 times funds. You can see here that we have a really huge trade going on across the board. This actually came through during the session. So over the last 24 hours, we saw this really large 3 times fund. Of course, since that point, well, the stocks obviously fell, and that was right around those periods of time where Trump was mentioning that Fed Jerome Powell needed to do some cuts. And of course, the market does not like that because there are 2 usual forms of stability that we look for in markets. One of those is the Fed, and one of those is the US government. And if the Fed is going to be, let's say Jerome leaves, then that's going to create all sorts of instability in the markets across the board. Now, when it comes to earnings, we have some big earnings on the horizon. The big earnings in particular, Tesla. This is going to be after the close Tuesday. We'll have a special report on that. We're really looking forward to seeing what happens there because, of course, this could kick off a massive trade and huge volume. And then on top of that, we have Alphabet, Google this week on Thursday after the close. Now, if you thought they were going to be not volatile events, take a look at what the options market expects. They expect somewhere between a 7 to 8% move on Google and an 11% move on Tesla. They're huge. So that's huge moves coming in. Take a look at that screen. Make sure you're aware of what's coming in. So what's going on here when it comes to bear markets? Now, as you guys know, bear markets are pretty common with recessions. Now, we did hit a technical bear market just the other day, which is negative 20% from the top, and only really 3 of those have ended in soft landings. I always bring this chart up at the moment because I think it's very important to note that this period here and this period with 25, when you had these kind of really close together, soft landing, then a hard landing, then of course that was really, I think, the most synonymous time. It's also one of those times that we saw the overlays. So that is that we basically have one of the most closely correlated markets to right now making a look at this 1960s. Now, interesting after that as well, we had stagflation. So talk about parallels. Best reports on the last 5 days. We did have quite a few gains. We saw things like the staples. We saw gold. We saw regional banks coming back through. So we did see some stabilization in terms of the core of the market, but we still have sell-offs across tech. So people are not willing to buy higher multiple businesses. They're just looking at basically buying defensives at this stage. Quick watch on central bank liquidity. We will be updating this probably all year, realistically, because we'll have to know what the central banks are doing. The Fed did inject some money the other day, though that has dissipated. We're looking to see what happens this week, and we'll update you each day, so no updates there. And on the SPX, if we have a look here at the chart, you guys can see that this is still a downward trend. So basically, we're still in negative gamma. We're getting closer to a 61.8 pullback of that current kind of rally to drop. And the daily 20 remains one of the most important levels. This has been kind of the selling level that we've seen so far. Now, when we move over to the US 500, here are the options high-low levels. Obviously, we were unable to get above 53.38 and 53.80 over the last week, and we fell underneath 5200, causing a very quick sell down to 51. Now, that's pretty normal. I mean, basically, the market will have to go instantly back down as soon as that does occur. And what you guys can notice here is that when we look at the fibs and we look at the overall kind of levels here, we're getting close to that 61.8. So around here, maybe there's a buyer, but there's really no level of structure. Until the market gets back above these previous highs, we can't really be talking about 5,600 again or 5,660, which would be ultimately where we think the biggest sellers will sit. And in general, the market is currently in a downward trend. So if you're buying the dip here, then I'm not sure what you're buying it off really, but basically it's stuck within nothing really that good. It's just continuing down a series of lower highs and lower lows since that island reversal over here. Let's have a look at the options market. What is it telling you? The exact same thing. 5,100 currently the put wall. Obviously, we're in negative gamma. We see here 5,200 on the 23rd. So that's an interesting point there. But realistically, still a lot of puts and a lot of put walls, each kind of 100 points on the way down. So if we lose 5,100, then you've got to think 5,000. And then you might even start thinking about that 4,700 level, which would be a very, very good level. Now, as we enter into everything to do with obviously Tesla earnings, you guys can see here how many stacked puts there are. 220 in particular, so stacked across the board. 220, 220, 220, super stacked, and it's everywhere. So I guess that's the kind of a key level there to be looking at. When let's have a look at Nvidia, it's the same thing. 90 at the moment is the most struck, still in negative gamma. We're at a 61.8 fib, and obviously we'll be looking at that together in just a moment. Now let's have a look here at bonds. So basically bonds did drop off across the board, and you can see here that bonds did drop last 24 hours. We saw yield spreads obviously start to get a little bit worse again, but still not too bad. And we've basically been in stabilization form after the other day where everyone blinked when yields got high. Remember to mark out your US 20, 30, and 10-year yield rates because it's really important to see those. And yeah, so basically this is going to be a pretty key level for us to look at. And we'll be looking specifically at the US 30-year as well because this seems to be the most interesting one right now, pushing up towards that 5 again. If it breaks 5, markets will not like that, and you could see some plunge protection team come in very, very clearly. Have a look here at high yield junk. You can see here high yield junk did drive up in recent weeks, but then it's dropped off again in the last 24 hours. Let's have a look at the US dollar. It's under a lot of fire. A lot of people pressuring the dollar down. Super level of demand here underneath these lows. Definitely a point of interest and something that we're looking at specifically here when it comes to the US dollar. And as you guys know, when dollar's down, gold has historically been up a lot. So yeah, basically gold is absolutely flying at this stage. These are now 3 massive candles. And whenever I see these, I always get a little bit concerned. It's not that I don't think gold can go to 3,600. It could go to 4K. But you've got to remember that this is in euphoric stage. And obviously, if you look at euphoria in general, whenever you get these euphoric kind of runs on stocks, then they tend to end pretty badly. So you don't want to end up being, at the end of the rally where you can drop like 40% or 30% fairly quickly. I'm not saying we're going to drop that much on gold, but I do think that there'll be a 15% sell-off very quickly at some point in the future. So just keep that one in mind. Now, is silver playing catch-up? Not quite. $33. We're looking for it to get above there. $33.20, we get above. That's going to be pretty strong if we can do that. And US oil is just basically sitting. So we obviously saw that inverted head and shoulders, and we've come back down to the neckline. So if you're a buyer of oil, although I think geopolitically these are very tough buys or sells at this point, then you can see here we have a very interesting level finding ourselves right now with oil. So if you're interested, that is definitely a zone that I think day traders will be watching. For Tesla, 220. We saw all these puts lying around just before when we had a look at it. Underneath 220, if we go bad and this earnings goes bad, then boy, oh boy, could it be catastrophic. Why? We could get a waterfall effect. And that could literally cause Tesla to lose, a lot of money very, very quickly. Remember, it's stacked towards puts. So any good earnings, that's going to be okay. But a bad earnings could get pretty nasty pretty quickly. 180 would probably be a target that a lot of people have. 175. So just be careful there in Tesla. And if you're a bull, then where is it? It's at support right before the earnings announcement. Let's move over to Nvidia, 61.8 fib. Again, want to see that hold over the next 24 hours. Too early to tell. Same thing here for Google, 61.8. Same thing for a lot of the mag stocks, actually. A lot of them have pulled back more than, say, the S&P at this stage. So all of those are sitting on that kind of decent support level. HSI is something similar. Hang Seng, obviously, we see here that we've bounced back up and we've found some kind of buying pressure. And the NASDAQ, you can see here, has dropped, but it hasn't quite dropped to the 61.8. So the Hang Seng's kind of sitting in the middle of nowhere land, and the NASDAQ is sitting in still a series of lower highs and lower lows. So we're looking specifically down here, and I don't think there's any strong support for it just yet. So you've got to be a bit careful here. The trend is down at this stage, so you've just got to keep that in mind. US 2K, not doing too much over the last 24 hours, actually holding relatively well considering the rest of the stock market indices. But the big one to discuss is Bitcoin. It's putting huge pressure on the 89,000 area. And if it's able to break through that, then as a lot of people have figured out, it could be a change of trend. And this is a big deal, of course, because could it be starting to play catch up to gold's move? And this is the one I think most people are going to be watching. Double bottom, success. Well done, anyone that had that trade. Congratulations to you. I'd like to see some consolidation around here, reach out, come back down into the level, and then ultimately, hopefully go long. So Bitcoin's certainly in focus now, certainly something that we want to be looking at in the future, and we will be watching it very closely together. If you enjoyed today's video, then please remember to subscribe, smash that like button. We'll see you in the next one. Bye for now, guys. Make sure to follow us over on X as well if you're interested in some of our most up-to-date charts. Thanks so much. We'll catch you later.